common question I get is if you're not using a prop firm like Top Step, etc., and you're wanting to trade futures with personal capital instead, how much money do you need? How much money do you need to make a living in your personal trading account, etc., etc. So I wanted to make this quick video to run through, break it down. It can be confusing, especially if you're new to futures. I'll break down the numbers and the requirements of what's needed, plus tell you a little bit about how I have my personal account set up at the moment. So if we jump over to the screen here, and for example's sake here, guys, you know, the most common thing people trade is the NASDAQ or the E-mini S&P. So I'm going to use those for an example, okay? There are many futures trading brokers out there. I'm not affiliated with Tradeovate. They're just a broker that I've used in the past. In my opinion, they were quite beginner friendly to set up. We use Tradeovate as an example, and also the E-mini S&P and the NASDAQ as an example for this video. So if you look at their margin requirements, okay, you go to tradeovate.com, you click on trading, go to margins, you will be able to see the margins required for whatever product you're choosing to trade. If you're looking at the E-mini S&P 500, for example, you have two things here. It's got a day margin and an initial margin. Like, holy shit, $12,000. Most people don't have that just ready to throw into the markets at will. So that can scare quite a people off. But let me explain what this means. So the day margin here, if you are just an intraday trader, right? You're not swing trading, you're not holding positions through the close, then you only have to worry about the day margin, okay? So the day margin is how much money is required per contract to open and close a single position in your market of choice. So for example, if you're trading the S&P 500, you need a minimum of $500 to open one lot intraday. Okay, now if you're wanting to hold a position through market close for that 1 hour that the futures market closes every single day, if you're wanting to hold a position past close and through that 1 hour shutdown, you're going to need this $12,980 to maintain one contract overnight. So this bigger number here only matters if you are holding positions through close. Okay, most of you watching this channel, I assume, are day traders just like me. You're in and out, you've done, your positions are flat by the end of the day. So you only have to worry about the day margin. Okay, so if you want to trade one lot on the S&P 500, you need at least $500 in the account. And as long as you're flat by the end of the day, you don't need to worry about this larger number here. Now, one thing I want to bring your attention to, guys, is that this number here, that's the bare minimum. Okay, so imagine you have $500 in your account, you're trading one lot on the S&P 500, but then it starts to go into drawdown, right? And this number, this $500 account balance you have dips down to like 490, 480, etc. You're probably going to get margin called, and they'll auto liquidate your positions because this is the bare minimum. So you're going to want a bit more than that. Now, obviously not financial advice, but you're going to want more than just the bare minimum margin for each contract. So if you want to trade one contract on the S&P, personally, I'd probably have nothing less than $1,000 for one contract, because the moment that dips below $500, you're probably going to get margin called, okay? It's embarrassing. It hurts our feelings. We don't want that to happen, okay? So again, just highlighting that is the absolute bare minimum. You're going to want a little bit more than that, and that's how much is required to open up one contract, one lot size on the S&P 500. And same for all these other ones for the NASDAQ, etc. You need $1,000 for one contract bare minimum. If you're just day trading, if you're holding through the close, you're going to need almost 20 grand. Okay, so big difference. Now, a lot of you be like, man, I can't afford this. I can't afford the bloody, this is so expensive. I mean, you know, a lot of people don't have $500, $1,000 spare. I get it. Well, then that's why you can look at the micros. Okay, if you got micro indices, jump over there. It's obviously a lot more workable there. If you got the micro S&P 500, you're going to need $50 per lot. And if you want to hold that overnight, you're going to need just under $1,300. Same for the NASDAQ, only need $100 per lot, or if you're going to hold through the close, $1,947 to hold through the close. So the micros are a lot more workable for a lot of people, but just wanted to explain that the difference between day and initial, okay, that can confuse a lot of people. As for how much money, you know, you need in an account to make a living from futures or whatever, it all comes down to, you know, how many contracts you trade. What I like to do is I only keep enough money to cover how many contracts I personally trade on a regular basis, plus a bit of a cushion, and then I withdraw anything on top at the end of the month, or I top it up. If I'm in a drawdown, I'll top it back up. So for example, these days I'm purely trading the US Treasury Ultra Bond, and the day margin is 1,000 USD. I trade between 3 and 5 lots on the Ultra Bond at the moment. So, you know, that would mean I need minimum $3,000 to $5,000. I keep $10,000 in there, okay? And that's just me personally, $10,000 in there. End of the month, withdraw any profit and start again at the 10K, or if it's in a bit of drawdown, top it back up. And that's another thing I wanted to also say say, again, not financial advice. I don't believe it's a good idea to ever keep huge amounts of money in your broker. You want to be withdrawing regularly and not having a whole nest egg inside your broker, okay? And that was a noob mistake I made. Obviously, I'm still fairly new in my futures career. This is my second year trading futures. Last year, I was keeping around 6 figures in a trading brokerage account when I was only, trading 2 to 3 lot size on the NASDAQ at the time. So there was no need for there to be 100K in the account. Absolute rookie thing to do. In my opinion, all that is needed is enough to cover the amount of contracts that you are wanting to use, plus a decent amount of cushion so that you can avoid being margin called, and making sure you're withdrawing regularly, withdrawing those profits at a regular interval. Not financial advice, but I take mine out monthly and start backing in at the flat account balance of $10,000. So hope that made sense to you guys. Again, this is for those of you that want to trade personal capital, either alongside or instead of prop firms. Again, if you can't afford this, it is quite steep, compared to trading CFDs and Forex. It is quite the barrier to entry, but it's a professionals market, trading futures. If you can't afford it, obviously you do have the options like prop firms such as Top Step, etc., who I also use. I use Top Step alongside my personal funds as well. So you do have options. This might be different across brokers, depending on what broker you end up choosing. They're all roughly the same in my opinion. The main thing that's important to me is the commissions, right? So yeah, just looking at different brokers, commission plans, reducing your trading costs. That's the main thing. And then, are they a trustworthy broker? Or most of the big names, that have been around a long time is normally a decent bet. Hope that helped to clear the air for you boys and girls. Like and subscribe.